This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history.
There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Hello and welcome everybody to another very interesting day in the crypto markets. Boy, oh boy, this is not a boring place to have your money, that's for sure. Let's give everybody a couple of minutes and we'll say some hellos. All right, well, let's get things kicked off. The first thing is I kind of want to do a test for everybody else that's here. When you have war, or when you have a recession, or you have threat of a war, you have threat of a recession, or you have threat of a slowdown, what is the #1 economic response that policymakers make? And I know you know this answer. So I'm going to wait here a second for you to tell me what that answer is. How do you deal with a war and how do you deal with a recession if you're a government policymaker, knowing the experience that you have that we've lived through? Right. Gary said it. You print money. Now, money doesn't necessarily mean, right, expansionary policy. Money doesn't necessarily mean that you're actually, you're cranking the actual printers. There's a lot of ways to inject liquidity into the market. You can reduce reserve requirements. So what does a reserve requirement mean? A reserve requirement says that a banking regulator says to their bank, you have to keep a certain percentage of your assets locked up that you cannot use in order to protect yourself against a run on the bank. When regulators want to inject more capital in the market, they go to the banks and they say, okay, instead of having to keep 8% of your assets locked up, you only have to keep 5% or 6%. And they reduce the amount of equity that the banks need to keep. Now, because banks issue anywhere from 10 to 1 to 30 to 1 to 50 to 1 of whatever capital they have, just a small movement in lowering the reserve requirement can result in a massive spur of lending, which is a form of monetary printing. The banks are essentially making money through loans. Now, that money is quote unquote destroyed when the loan is paid back, but it is expansionary. The other thing that they do is they will tell their central bank to go buy debt so they can keep interest rates low so the government can issue more debt. And then the other thing governments do is they have government programs and they put, fancy names on them like student aid relief or things like that. But it's just a form of money printing. It's a form of subsidizing certain parts of the economy with government borrowing. It's not even with government money. It's government borrowing. It's not like they're taking part of the money that taxpayers give them and then allocating it over there. They borrow the money and then pump it into the system. And so the most important aspect to get right, at least of where we are in this current market cycle, is is the money supply expanding or is it contracting? And as we look out down the road, do we think the money supply is going to grow at a faster rate than normal, at the normal rate, or at a lower rate than normal? Well, all of us who have a brain in our head, we don't need to have MIT level intelligence to understand that the pace of borrowing by governments is going to increase. You then throw a war into that, you throw the possibility of an economic slowdown into that, and again, we don't need to be economists to see that that is going to be the cause of an expansionary monetary policy, which creates inflation, which enriches the people in society that already have assets, and it further impoverishes the people in society that don't have assets. And so this is why, no matter where you are on that asset ladder in life, whether you have no assets or lots of assets, it's important that you get on the Bitcoin ladder to whatever level makes sense to you. Anywhere from 1 to 10% of your net worth, in my opinion, should be in Bitcoin. And the reason why I say that is because Bitcoin is a peerless asset in the sense that there has never been an asset like it that was truly decentralized, that didn't rely on a third party, and had a true hard cap on the amount that would ever exist. And so because that's such a new idea, many smart people just reject it because, we've done it this way for the last 400 years, or we've done it this way with gold for the last 5,000 years. It's the equivalent of me saying, well, we rode horses for 30,000 years. Why do I need a car? How dumb does that sound, right? Or we used smoke signals for 2,000 years and pigeons for 1,000 years. Why do I need a phone? Right. So again, it's that kind of, I need you to put that in perspective. Friends, pull back the camera. We are going to move to a completely digital world with our currency. All money is going completely digital, whether it's chips in our hand, whether it's through fingerprint technology, eye retina technology, whatever. Paper money is going the way of the dodo. Coins are going the way of the dodo. And so in a digital environment where everything of value is in the digital realm, then you have to ask yourself, well, what's the perfect digital money? And it's Bitcoin. There's nothing that even comes close. No government can author a monetary system that has the same properties that Bitcoin has. Because all government monetary systems have to expand in order for them to survive. They just have to. You just have to accept that. The difference is that we now have a way out. We have a life raft in the form of Bitcoin, which we didn't have before. Our parents, our grandparents, our great-grandparents, they had to rely on gold and diamonds. But gold and diamonds, unless you really know what you're doing, you can get ripped off in diamonds. The market could be illiquid. Now they can make lab-grown diamonds, so diamonds don't have the value that they used to have. And gold is so heavy. You know how heavy $1 million worth of gold is? It's bloody heavy. Try walking around with $10 million worth of gold, $50 million worth of gold. You can't do it. Try this. Take a 100-ounce gold bar and go try to fly to Europe with it and see what happens. They'll put you on a no-fly list like that, right? So portability matters, right? So you need portability. You need the ability for the asset to not be diluted through a third party, and that's Bitcoin. And so why do I talk about Bitcoin so much? Because as Bitcoin goes, so goes the whole space. As money floods into Bitcoin, it starts percolating through the entire ecosystem and starts sending other areas of the market radically higher. Now, there is one specific area of the market that I think is not really dependent upon Bitcoin, and that will be the beneficiary of massive financialization by Wall Street. I just recently did a briefing on that is still up if you haven't seen it. You can go to bigtconvergence.com, and take a look at that at my latest research. If you decide to join me in that program, you're more than welcome to. If you don't want to and you just want to get an inkling into my thinking about what's coming next, I strongly recommend that you watch that presentation. That's at bigtconvergence.com. So here's the way Bitcoin and crypto operates anytime the spaghetti hits the fan. It goes down. Why? Because Bitcoin is an instant source of 24-hour-a-day liquidity. Instant. And it's a massive global market. Spaghetti hits the fan in Europe, spaghetti hits the fan in Asia, spaghetti hits the fan in the Middle East. I know I'm going to have margin calls in the morning. I got to free up $300 million like that. I've got some Bitcoin. Bang, sell the Bitcoin, get my cash, wire it, cover my margin, and off you go. Bitcoin is this global release valve for liquidity. You always see it. Whenever something bad or unexpected happens in the world, Bitcoin gets clobbered first because people go to it for liquidity. But then, once the dust settles, what happens? It guns. It guns and it guns and it guns. And how do we know that's true? Well, look at all the nonsense that happened this year. Look at all the nonsense that happened last year. We had the banking system fall apart. Bitcoin got smacked in the mouth. And then what did it do? It almost doubled in price. When we went through the pandemic, Bitcoin dropped, I think 60%, 50, 60% in a day or two. And then what did it do? It 20x'd off the lows. So again and again and again, you'll see this knee-jerk reaction, and the headlines will be right. Bitcoin failing and gold outperforming Bitcoin and all of that. Gold is not outperforming Bitcoin. Look at where gold was 5 years ago, 3 years ago, 2 years ago, and look what Bitcoin has done over that same period of time. Gold is still a great store of value, but Bitcoin is a better store of value. To use Paul Tudor Jones, it's the faster horse in the race. Both good horses, but Bitcoin is faster. Friends, hear me when I tell you, for your short-term trading, you got to buy the dip, sell the rip. Remember we went down to 49.50K? You buy the dip, went up to 65K, you sell the rip. You just do that all day long with your trading stack. With your core stack, leave it alone. We're going to see at least $150,000 on Bitcoin sometime next year. That's my call. Let me just be clear, okay, before somebody says that's my opinion, that we'll see at least 150K next year in Bitcoin, and potentially much, much higher. It all depends upon when we see the launch of Bitcoin options trading. I think Bitcoin options trading will act like nitroglycerin for the price of Bitcoin, because it allows a level of player to come into the market that ordinarily just wouldn't, because they don't have the ability to hedge or generate income. So I'm very excited for the launch of options on Bitcoin. It is not yet priced into Bitcoin. If it was, Bitcoin would be trading at around 100K. So Bitcoin still very, very cheap. Buy the dip. I bought more Bitcoin yesterday. Anytime I see it dip down, I buy it. To me, it is the lowest risk, highest reward play in crypto relative to its risk. Is it the highest rewarding play in crypto? No. There are many other plays that are going to have much higher returns. But on a risk-adjusted basis, for the amount of risk you have to take relative to the return, I don't think there's an asset that beats Bitcoin right now. Think about this. You have to wait usually 7 to 8 years to double your money in the S&P 500. And based on today's price, you're going to do more than that, I believe, over the next year on Bitcoin, which is incredible. I think at a minimum, you see 150K. Look, if things go nuts, yeah, sure. The numbers can get outrageous. I don't want to say that before people say that I'm sucking on hopium. So the question is, when is the time to buy it, and how much is the currency? Are you talking about Bitcoin? I'm always a buyer of Bitcoin on weakness. You can buy Bitcoin right here. I've written several articles on how to buy Bitcoin in tranches, so you have a good average price. But in terms of your trading stack, just buy it when it's getting beat up and everybody's telling you you're an idiot to buy it. Just look at the headlines. When the headlines are screaming Bitcoin bloodbath, Bitcoin failing, Bitcoin not doing what it said it would, those are usually good times to buy Bitcoin. Okay, let's have a look. I don't know what Crypto Trader Dex is talking about. When will the bull run go crazy? It's just a guess. Rather than focusing on that, let me give you some insight into my mindset. I have given up trying to get the absolute perfect price. And what I have focused on is getting a good price relative to where I think the asset can go within a certain time frame. So I believe between now and the end of next year, Bitcoin will be at least $150,000. So whether I end up buying my Bitcoin at 62, 52, 48, 58, it doesn't really make that much of a difference. What is most important is that I have a position on to take advantage of that larger move. And so what I do is I focus on the profits I'm going to make on the larger move rather than trying to expend all my mental energy on getting the perfect entry price, because I've been doing this now for almost 35 years. At least for me, I've never been able to get the perfect entry price. I can get a good entry price, but there's always going to be a better entry price. Like yesterday, I was buying IBIT, bought some at 35 and a half, 35.17, 35, and then it went to 34 and change. You know, what are you going to do? But at least I have the position on, right? So you got to let go of getting that extra quarter, that extra half a point, or that extra dollar, and start focusing on getting the next $30, $40, $50, $100 out of that position. Hopefully that makes sense. So the question is, are you saying you will bail out of 150K? What I'm saying is, and I've said this publicly before, that I will more than likely sell half of my Bitcoin at $150,000. That is the number that I have pegged, that I will probably sell half my Bitcoin, and the other half I'll leave for higher prices. Okay. Now, that doesn't mean that you need to do that, but I've been in Bitcoin a long time. I mean, I own it as low as $400. By next year, I would have owned Bitcoin for 10 years. So, you know, I want to take a little cream off the top for myself. Question is, do you recommend IBIT over individual BTC for your short-term stack? Good question. The advantage of BTC, holding the BTC, is that you're not beholden to trading hours, and so you have a lot more flexibility. I mean, you can use either or. I have a tendency to use IBIT only because I'm very busy and I don't have time to stay up late at night watching prices. But I think that's a question that really only you can answer, and look at the way that you trade. I'm saying that the question is, you're saying that you would sell your core stack as well as just trading? No, I'm saying that I will sell half my core stack at $150,000 Bitcoin. That's my plan right now. Now, could that change if we get to 150 quick? Like if we got to 150,000 by January, would I sell half my stack then? I don't know. I think my greed glands would probably get a little, excited, and I'd probably think that there'd be a lot more. So it's definitely a game time position, but generally speaking, my plan is to sell half of my core stack at 150K and take some money off the table and buy some things that I've wanted to buy for myself. Okay, any more questions in closing? Well, generally, I don't remember if I said July is a good position to sell. Generally, we peak somewhere between October and December in the year after the halving. Doesn't mean that that's going to, play out like that again. But I mean, you can look at a chart, and the chart will show you where generally, the peaks have been in the past. All right. Well. No, my convergence coins are still buyable. So if you have not gotten involved yet, please pull the trigger. The convergence is unfolding right now as we speak. And these down days are a great time to take advantage of the prices. Okay. Somebody said, can BTC go lower? Yeah, BTC can go lower any day of the week. But let me explain something to you. I can come in here with the most bullish prognostication of BTC in the world, and it can crash 50% tomorrow for absolutely no reason. That is the nature of Bitcoin. The key to make money from Bitcoin is to not confuse short-term volatility with the long-term adoption story that ultimately drives the value of Bitcoin. And so this is why it's really important that you be fully bought in to why Bitcoin has value and why it will continue to have value over time. Because if you are not thoroughly bought into that idea, I mean heart and soul, then you're going to get smashed by volatility. You're going to hear me speak bullishly about Bitcoin one day, then you're going to come in and somebody bombed somebody else and Bitcoin's down 40% in 2 days, and you're going to think like, well, Tawari doesn't know what he's talking about. Look at the market. The market must be smarter than him. I'm going to sell. And then a month will go by or 2 months will go by, and then Bitcoin will be trading at new highs. It is the nature of the asset. If you don't believe me, go look at a chart. Go look at a chart. That's the way it trades. So rather than asking, can BTC go lower? Yes, it can always go lower on any given day. Ask yourself, where do I think BTC is in a year, 2 years, 3 years, 4 years, 5 years? Why do I believe that? Do I think adoption's going up or going down? Do I ever believe that that 21 million hard cap will be violated? If the answer is no, and that 21 million hard cap is never going to be violated, then if the hard cap's never going to be violated and adoption is still early and going to continue, then the price has to go up. It's that simple. It's so simple, it's difficult for a lot of people to understand. So I've always said, you can be too bright for Bitcoin, but you can't be too dumb. Because once you really understand the fact that it's limited, and you understand the fact that it can't be manipulated by anybody else, and you understand the fact that you can hold it, nobody can stop you from trading with another person with it, it's highly portable. Like once you get that, you're like, oh yeah, this is going up. Yeah, it might not go up today, it might not go up tomorrow, but this is going up. And that kernel of an idea of that adoption story is what has kept me in Bitcoin, these past 10 years, dealing through volatility that at times had me feeling like, my world was going to end. But I just kept going back to that core idea of adoption. And it's played out, and I believe it will continue to play out. Okay, friends, I want to thank you so much for tuning in. It is always a pleasure spending this time with you. I hope you found this valuable. Please be rational. Don't make your decisions based on a headline. Do the work. Think it through. Understand how money moves through this world. Understand that Bitcoin is being viewed by people with money as a chaos hedge. Let me tell you, I'm going to go off there in a little bit. What do you think the number one fear of rich people is? Anybody know? What's the number one fear of a rich person? Anyone? I'm going to tell you. Number one fear of a rich person? Not being rich anymore. It's their number one fear. Not being rich anymore. They might not own it. They might not be truthful about it. But I hang out with rich people all the time. And they are terrified of going broke. Terrified of going broke. It's why they own so many different assets. So Bitcoin is the ultimate chaos hedge. It's the ultimate, it thrives in chaos. It's the ultimate chaos hedge. If you look in the past at the way that rich people protected their money from wars, recessions, famine, pestilence, they bought diamonds and they bought gold, jewelry, right? In a war, somebody can take your real estate. In a war, somebody can take your art. But you got diamonds, you got some gold, it's portable wealth. So rich people, very rich people, are incredibly paranoid people. Incredibly paranoid people. They're always worried about losing their money. And so what we will see over time is they will carve out anywhere from 1% to 5% of their assets and buy the ultimate chaos hedge. And that's Bitcoin. There's something like 50 million millionaires in the world. There's maybe in the active float of Bitcoin, maybe 4 or 5 million, call it 7 million Bitcoin at most, that actively trades. There isn't enough Bitcoin for every rich person to own an entire Bitcoin. So that story is still playing out. The very wealthy still are somewhat skeptical of Bitcoin. They're coming around to it slowly but surely. But eventually, they will reach that conclusion that they need to have at least 1 to 5% of their wealth in Bitcoin in case everything else goes tits up. They will realize, okay, this is the ultimate chaos hedge. And they will look at it as an insurance premium that they pay. Okay, this is going to cost 1% of my net worth. It's an insurance premium. And that's the way very wealthy people think. If you're very wealthy, you understand it makes no sense to hold a large amount of cash because cash is the worst asset in the world in terms of of how it wastes away with inflation. But you have to have cash because cash is your army if you get invaded. You get a business reversal, stocks go down, business goes down, everything is crappy all at once. You need the cash. The cash is like oxygen to you at that point. So the same is true with a chaos investment that helps you sleep well at night in case there's a war, in case you have to leave, in case there's a confiscation of wealth by governments. And Bitcoin fits that gap. So that's a little extra tidbit that I wanted to leave you with. All right, friends, I want to thank you so much for tuning in and for listening to my ramblings. It is always a pleasure to be here, and I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.